Hi guys, good morning. Thank God it's Friday. It is Friday morning and of course it's Valentine's Day. But you know what, let me tell you one thing. The one color that the market really doesn't want to see is the color red, because we have been seeing the color red for the last 7 days, and it is high time that we see some kind of a breather. Yesterday, of course, we did see a breather, but towards the end of the session, last hour selling, again turned the tide towards the negative zone. So we ended the day in the red for a 7th straight session. This morning, lots of news to digest. We had the all-important meeting between Prime Minister Modi and US President Trump. We'll be talking about the takeaways from that crucial meeting. We'll also be talking about all the global cues, of course, looking mixed, but Wall Street saw a good rally. And the reciprocal tariffs that were announced by President Trump will not be coming into effect immediately. It will come into effect in April. So that was some kind of a breather. And of course, we saw Wall Street rallying as well, given the fact that inflation data is hinting at a softer personal consumption expenditure data. So that's good news when it comes to the rate trajectory. So lots to digest. GIFT Nifty hinting at a positive start as well. So let's kickstart the show then. Keep your queries coming in, by the way. We'll try and take them up as well. But quickly take a look at the top headlines at this hour. Well, Prime Minister Modi and US President Donald Trump agree to begin work on a trade deal between the two countries. Trump also says military sales to India will increase by billions of dollars, including the sale of F-35 fighter jets. The two leaders also agree to double international trade to over $500 billion by 2030. Prime Minister Modi also meets Tesla CEO Elon Musk. The two discuss strengthening collaboration on technology, space exploration and artificial intelligence between the two countries. India's efforts towards minimum government and maximum governance were also discussed. Coming to the market action then, stocks rally on Wall Street led by Nasdaq even as US President Donald Trump signs a memorandum planning reciprocal tariffs on trading partners. However, the fresh tariffs will not come into effect for a few months. And Asian markets largely higher, while the GIFT Nifty hinting at a positive start for our markets. Gold rises on safe haven demand amid concerns over Trump's reciprocal tariff plans. Crude remains range bound with Brent trading around that $75 a barrel mark. Okay, then, let's quickly take a look at the cues for trade first. Markets, of course, failed to hold on to gains. It was a 7th straight day of red for the market. Sensex and Nifty slipped as much as 1% from the day's high. In fact, of course, as I mentioned, it was a 7th straight day of losses. The Pharma index, however, was the top gaining index. Looking at some of the stocks that didn't do well, Adani Twins moved sharply lower in the last hour. Auto stocks as well erased intraday gains, and Hero Moto, Eicher Moto, they were almost Eicher Motors rather were almost down 2% from their day's high. In fact, let's talk about the put call ratio as well. Then it kind of climbed slightly to 0.9 vis-a-vis 0.75 in the previous session. Manappuram Finance reported numbers yesterday. The stock continues to be in F&O ban. FII, action. I want to point out that FII sell-off or selling has come down slightly. That could be some bit of a reprieve there, because it was a FII sold stocks were 2,790 crore rupees in the cash markets. That has come down quite a bit. Every day you tend to see figures of 4,000, 5,000 crore worth of stocks being sold. So 2,790 has reduced a bit. So that could be some bit of a reprieve. But domestic investors continue to be net buyers. 2,900 crore rupees worth of stocks bought in the cash markets. But quickly bring on board Raja Venkatraman, co-founder Neo Trader, to understand the setup. Raja, Valentine's Day and positive cues. Also the meeting between President Trump and Prime Minister Modi is out of the way. No negatives as of now. How are you looking at the texture? Yesterday we gave up all the gains, but today do you see some bit of a green, and do you expect it to sustain, if at all?
Yeah. Good morning, Nandita. Thank you for inviting me to the show. So, like always, the positivity was there for a while. But now the tables have turned, and the kind of texture which is there in the market clearly says that at every rise you are having a sell-off. 2 days ago, we had a test of the Jan 27 low, and we saw some buying coming in. and day before yesterday we saw a rise, and that dissipated. So what is happening right now is that there is no certainty in the market. Now, a lot of good news are coming in, but we are not able to digest it. The RBI policy came with a rate cut as expected. BJP won the Delhi elections. BJP has gone to Trump, and somewhat there is a cool off in the tariff. But all these things are not helping, and overall sentiment continues to insist that FIs are going to hold on to their selling stature. And that posture, if it continues, then it's going to induct more bearishness into the market. And I feel that at every rally, it's going to be a sell. So unless
Right.
23,500 is really closed on an end of day basis, I don't think that we should get excited and start, thinking that the low has been made. People are calling for a double bottom as well. I don't think that it is a time yet to call for a double bottom. I think that there is some more pain yet left in the system. So it's best to stay on the sidelines for now. I see that another 1 week more of some range bound action
Right.
or negative bias to sustain.
Okay, that's the view. Double bottom still not there on the charts according to Raja, but we're getting the first ticks, and for now we are seeing green on the screen, much to the relief of the market. But let's see whether or not this sustains or not. 23,100 back on the charts. It's an 80-point up move on the Nifty and a 280-point up move on the Sensex. The broad end of the markets, remember, mid cap index managed to end the day in the green yesterday, although it came off almost 2% from the day's high. Today as well, we are seeing the mid cap index moving in tandem with the benchmark, slightly underperforming, so to say, but nothing to complain about. The advance decline ratio is also in favor of gainers, almost 2:1. 1200 advances to 689 declines. So breadth is looking okay as of now, but early days to call it a trend really. The Nifty Bank Index, a triple digit move there as well, 49,500 back on the charts. And I want to point out that all the sectors as we speak are trading in the green at the current juncture. Barring the pharma pack, so to say, pharma is the only sector that's trading in the red. Opened the day in the green, but it has slipped into the red. Auto pack, 0.5% gains there. Metal is doing very well, 1.5% gain coming in there. So metal leading the up move as of now, and pharma is the only sectoral laggard. But in terms of movers, Hindalco, top gainer, reported numbers, steady set of numbers, and reacting to that, Tata Steel, JSW Steel. So top three counters on the Nifty. Our gainers on the Nifty are from the metal pack. Tata Motors also doing well. Shriram Finance, M&M, that has been a laggard over the last few sessions, has managed to stage a good comeback. ICICI Bank, Axis Bank as well, providing support on the upside. On the downside, Adani Enterprises continues to head lower. Top Nifty gainer as of loser, I beg your pardon, as of now. Kotak Bank, was gaining yesterday on the back of RBI reprieve, has come under some bit of selling pressure today. Sun Pharma, Dr. Reddy's, some pharma names under pressure, Apollo Hospitals as well. Eicher Motors continues continues its downward move, and some of the life insurance names have also come under pressure. They've seen good traction over the last few sessions, but today is under some bit of a selling pressure. But looking at the open, Raja, first of all, your recommendations for our viewers.
Yeah, considering the bias which I've already stated, I would like to continue with a short bias only, and I would like to go with the auto name Hero Motocorp. So I would like to sell it at the current levels around 3960. Have a stop at 4025 for a drop towards 3860. Looking at the way the auto sectors are performing, I see that more pain is yet left in these names, and I think that this is one of the recommendations. The second recommendation will be a sell in Coforge. Yesterday we saw the IT pack as a whole cracking down, and this could be a good stock to short. So sell at 7875 or a stop at 7975 with a target towards 7825. So these will be two
Okay, these are
recommendations
the
for the day.
stocks, one from the auto pack and one from the IT pack. Sure, sure. But to talk about the metal pack as well, leading from the front as of now. Hindalco, that's the big gainer, good numbers, steady set of numbers. Net profit has risen 60% on a YY basis, boosted by its India business. Revenues have seen a double-digit growth. There's been robust performance in Indian aluminium and copper businesses as well. The margins, industry leading, 42% in the upstream business. How would you trade into the metal pack? This has been a fairly volatile pocket, right? Of course, with Trump tariffs and all the numbers also coming out. We've seen days of outperformance outperformance, and we've also seen days of underperformance. How would you approach this space, and what to do with a stock like Hindalco right now?
So when you take a look at the metal space or the oil and gas space, so where there is heavily commodity driven and they are dependent on the global factors, so there is a lot of volatility which sets in, and that actually compounds the whole issue. So right now, what is happening is that the global tariff and all this scenario which is impacting the metal space right now. What I foresee is that the metal space, yes, would see some bounce, but then I only find that this whatever stock you consider, be it Tata Steel, be it Hindalco, all these stocks are going to receive a sell-off at higher levels. Yes, the stock is trying to bottom out at the lower levels around 590 to 600, but I don't see much room on the upside. So any rally would be sold into. So one should not consider this rally as a buying opportunity. One should be wary because there is more sell-off that could emerge at higher levels. So if you want to consider this as a sell opportunity, then the levels will be closer towards 620 to 630.
620 to 630, crucial level to watch out for on a Hindalco. But I can spot a couple of queries on Kotak Mahindra Bank on our feed. I think Kannan Mathan wants to know your thoughts on this stock. Kotak Bank has been outperforming its peers. On a YTD basis, the stock is up over 10%. Today, some bit of selling pressure, of course, but there's been positive news flow also around the counter. Would you look at a buy on dip strategy here as well on a Kotak Mahindra Bank? And within the private banking names, would you say this is the one of the better placed stocks on the charts?
Yeah, you're absolutely right. Considering the way Kotak has handled the last few sessions, where it's largely volatile, it has been maintaining an upside, and the gap that got produced a few days ago has helped it to ensure, and it has basically sustained that gap. So that clearly says that there is some buying coming in. So, like in any phase of the market, we always need some counters to balance our position, and this could be one stock where if you are having shorts, then this could be one stock where you can hedge against your shorts on the long side. There is more room left in the stock, so you can buy it at current levels. You can use dip towards 1900. Yes, it's of course a little bit down, but then the setup will not be disturbed, and you can look for a target towards 2100 once the market recovers.
Okay, that's the view on Kotak Mahindra Bank. Hope that answers your query. But one stock that I want to discuss with you is Manappuram Finance. The stock has been consistently in the F&O ban. Yesterday, it reported numbers post market hours. Net profit has risen 6%. Net interest income has also, gained 14% or thereabouts, but the stock is down 5.5%. Numbers haven't been all that great, in comparison to Muthoot. Yesterday, we saw a good rally coming in there. Today, Muthoot is also under pressure. But given the fact that Manappuram in particular has seen a 10% cut in the last 5 sessions itself, do you see further weakness on the charts of a Manappuram, because it's still sub 200 levels? More downside, and between the two, which one do you prefer?
So when you look at the gold financing companies, they are having a direct correlation with the gold prices. So they had a good run in the last almost 2 months. Now what we are witnessing is that there is a sell-off emerging at higher levels, combined with the Q3, which has not been great compared to of Manappuram compared to Muthoot, and the kind of trajectory which we are seeing and the kind of setup which we are seeing clearly favors on the buy side a Muthoot and on the sell side a Manappuram. Both are in the same sector, but both are having diverse trajectory at the moment.
Okay, that's the view on gold loan companies. But I want to also talk to you about since you're talking about financials, Bank of Baroda. How are you approaching this stock on the charts? The company will be raising somewhere around 8,500 crore rupees via QIP and other modes. But within the PSU banking lot, is Bank of Baroda catching your fancy now?
See, the entire PSU banking space has been quite suppressed, and the kind of consistent sell-off which we are witnessing is not going to let go soon. So, and Bank of Baroda too is been under great state of duress, and the kind of decline which we are seeing right now in Bank of Baroda looks that it can persist. So it will not be a good time to invest into Bank of Baroda because I feel that the selling pressure is going to sustain for some more time. Any drop below 210 can carry it towards 200. So that's a big fall for Bank of Baroda in the next few days. So it's best to avoid this counter right now.
Okay, best to avoid a Bank of Baroda, but I'm getting a few queries on the pharma space on our feed. Nitin Shaji wants your thoughts on Bajaj Healthcare and Supriya Life Sciences. He's holding both the counters and he's making slight loss. He hasn't mentioned how much. But any thoughts? Are these stocks worth averaging, or should he stay put, or should he look at switching to some other stock?
Yeah, so when you talk about Bajaj Healthcare has been holding on quite well, and over the last, if you take the last few weeks, the stock has managed to hold on despite the market undergoing some correction. Every dip in Bajaj Healthcare has been a buying opportunity, and considering from the pharma space, this stock has managed to hold out quite well, unlike the other pharma names. So I think that the current levels are a good set of prices to average because I'm seeing an upside towards 950 within the next 6 months. So it's a good stock to consider. And what's the other name you said?
Okay, that's the view. Hope that Supriya Life Sciences.
Superior Life Science comparatively is witnessing some sell-off here. So unlike Bajaj, this stock should be avoided because it is undergoing some correction here and more profit booking can emerge. So Bajaj Healthcare is a better pick.
Okay, Bajaj Healthcare is a better pick. Let's move on to our next query then. Can spot a query on Thermax. Alex wants to know your view, but he wants a more fundamental view. But if you could just take us through how the chart is poised right now.
Yeah, considering the way everyone were hoping for some relief and some positive encouragement from the budget, that did not happen, and that has actually compounded the effect on Thermax. And you can see here, post the budget, the stock has actually gone down quite sharply. And one of the reasons has been that no kind of relief has come in, and the stock has been on a decline for the almost the last 6 months. Now the fall could accelerate here, and even on a higher time frame, the stock has not shown any kind of recovery here from the highs of around 6,000 levels. It has nearly halved. So the pain has not stopped yet, and it can continue. So it's not a right time to add to your existing position. And yes, there is definitely a call for exit, if I would say.
Okay, that's the view on a Thermax. But sticking to the capital goods theme, Vinod Patange wants to know your thoughts on L&T. He's holding at an average price of 3,350. He wants to know, does it have the potential to bounce back, or should he book losses? Any thoughts here?
Yeah, see, a stock like L&T, yes, again, a victim of the budget. It's witnessed a sharp correction, but I feel that at the current levels, L&T is performing much better than a Thermax. It has been able to sustain the higher ground. Yes, there has been a correction, and the correction has not only been in L&T; it's been across the board. Now, I would say that if the prices are stabilizing around the 3,200 levels, it would be a good time to add to your position.
Good time to add L&T. Hope that answers your query. Last query really then. I want to take up a query on transformers and rectifiers. This one's coming in from Anunay. He holds the shares at 1106 rupees and he wants to know whether he should average or exit. His time horizon is 6 months. Now, I think today is a record day for the bonus shares, which is why the stock is showing down almost 50% or so. But the stock has been fairly volatile, Raja. What should he do? He has a 6-month time horizon.
Yeah, considering that it has moved below the listing low, it does not augur too well for the prices. So the least it has to do right now is cross above 630 levels, which was its listing low. And right now the new lows are at 430 levels. So at this juncture, averaging would not be an advice which I would like to give. At this juncture, if you want to take a smaller hit. You can exit 50% of your position and wait for a recovery here, because the stock looks like it's headed for more downside, and I would not advise averaging at the current juncture.
Okay, not advising averaging at the current juncture. That's the call on transformers and rectifiers. Hope that answers your query. But with that, we've come to the end of the query segment. Raja, I would like to thank you for taking out time and joining in this morning. Wish you a very happy Valentine's Day. And by the way, as we speak, we can see red back on the screen, the color red. The mid cap index has slumped almost 1% from the opening highs. Nifty also back in the red, and the advanced decline ratio, 1:3. That's the advanced decline ratio on the NSE. So not looking great at the current juncture. But you have a great Valentine Day, Raja.
Yeah, same to you. Bye.
Thank you. Well, as I said, the texture of the market is once again, veering towards the downside. But let's understand, how one should navigate this volatility and this bout of sell-off. Joining me is Dhiraj Reli, MD and CEO of HDFC Securities. Great to have you on the show, Dhiraj. Chatting with you after a long time. But what do you make of, the kind of weakness that we have seen in the market? Any kind of attempt to stage a comeback, has really fizzled out, and same thing happening today as well. Your thoughts?
I think the overhanging concerns in the markets are on the valuations. Market peaked around September 2024, and since then we are seeing that markets have been more volatile and sideways. The concerns have been largely on the valuation sides. I think we are still, to some extent, in mid cap and small cap, seeing some froth, and that has been correcting. If you look at overall at the index level and large cap level, I think the valuations are reasonably good, decent, and maybe overvalued to the extent of 3 to 4%, which is something we are not perturbed about. So we believe that whatever had to happen in the markets has already happened. We've seen the budget, we've seen the President Trump being elected, and we have also seen the reactions after that. And now last night, there was some discussion between Modi and the President Trump on the way forward. I believe that the geopolitical conditions are also improving. With most of the large events behind us, I think the markets should improve from here onwards.
Okay, the market should improve from here onwards. But what about the, you mentioned mid caps and small caps, there's some bit of a froth. So do you expect more correction in the broader end of the markets? Because, earnings we've seen, whichever company has, missed expectations or even reported inline set of numbers, they have been punished and punished quite severely. Do you expect more of that to happen? Although we are at the end of the earnings season, but there were a lot of concerns surrounding mid and small cap funds as well. Your thoughts on the entire issue of whether one should now switch from mid cap to large cap. Do you think that's a prudent thing to do right now, or do you think that's just the fears are actually overstated?
So I'll give you one small analogy. If you're driving at 120 kilometers per hour speed, your response time or reaction time is very, very limited, and you're more prone to the accidents. Similarly, in the mid cap and small cap space, when the valuations are stretched, elevated level, and there is a froth in the valuations, they are operating at 80, 100 PE. Even if small blip in the performance earnings, then it has to have some knee-jerk reaction. So that's something we've been witnessing. The margin of error was very, very thin, and if at all we will get more earnings which are even if slightly negative, we will see the knee-jerk reactions in the market. So we still see some concern on mid-cap and small-cap space. My take is that 2025 will be a tale of two halves. First half, we will witness a lot of volatility and as well as sideways markets. But in the second half, once we are done with the quarter 4 results and we start to see better performance in the Q1 results, that's when we will start to see the markets moving up. Having said that, one has to be very cautious and selectively look at the mid cap and small cap, even in the large cap. This year and going forward from here, next 18 months or so will be a bottoms up strategy rather than you looking at the broader markets.
Sure. A bottoms up strategy, stock pickers market. That's what, a lot of experts have been pointing out. But, I want to talk to you about certain sectors, especially in light of the reciprocal tariffs, announced by President Trump. The sectors that have been focused are the likes of auto, steel, alumina, pharma, etc. How do you navigate? On one hand, you have the rupee depreciating, which is good for export-oriented themes, but you also have higher tariffs. Or you could be staring at higher tariffs. How does one navigate some of these sectors now? Of course, there are the details that will be thrashed out. These reciprocal tariffs will only come into effect from April, but in the run-up to that, how do you look at these sectors?
The biggest elephant in the room currently is the tariff discussion, that too bilateral discussion between the United States of America and many countries, including India. I think the meeting went off well with not much negative outcome last night. And there is a roadmap available. Till that time, we will have an overhang of the tariff continuing. But I believe there are a lot of positives to take away from the meetings, also doubling the business by 2030 to $500 billion with US. Augurs well for the long-term investment scenario in India. My take is that at this juncture, investors should focus more on the economy-facing sectors. We believe the private sector financials, banks, and real estate and cements are better play for the investors.
Sure. Just talk about the budget and RBI policy as well. We got fiscal stimulus. We also got monetary, action, in terms of the rate cut. So would the tilt be towards consumption now rather than capital goods and manufacturing?
Yes. Nirmala Sitharaman, our finance minister, gave a big boost to the consumption. I think it's a very welcome step. As I said, this year will be a tale of two halves. You will see that the impact of the disposable income increasing in the hands of the taxpayers will come only in the next fiscal. It would start kicking in from April only. And with the positive sentiments, more money in the hands of investors, and also interest rates trajectory looking downwards, may not be steeply, but at least the trajectory will look downwards, will give confidence for to the investors and consumers to do more spending, do more borrowings, and that will give us a boost to the discretionary sector. So we are quite sanguine on the consumption side, more so on the discretionary space, not so much on staple side. We believe tourism, travel, related stocks and discretionary consumption like two-wheelers should be a better bet going forward.
All right, those are the themes to watch out for. But what about insurance? There were regulatory overhang. There was, in fact, regulatory overhang. But there was, in the new tax bill, of course, the corporate tax rate has been kept unchanged, which comes as a big breather. So, given the fact that some of these life insurance names have already seen a good correction, would you say that the risk reward is looking fairly attractive now, and all the regulatory overhang, everything else is already in the price?
I don't think so. They are out of the woods yet. The premium growth have been subdued, and also regulatory overhang and changes around that is still continuing. It's not done yet. They will have its own negative impact on the insurance sectors. Having said that, it is a penetration story. Short term, near term outlook may not be positive, but long term, I think one can look at insurance sectors, but give it a quarter or two to take a decision rather than take decision right now.
Okay, quarter or two more, to actually watch out for what happens with insurance names. But lastly, what are you doing with quick commerce? The cash burn is increasing, the competition is intense, and we saw the numbers from Swiggy as well, and quick commerce, margins have shrunk. How are you approaching this space?
Quick commerce is the emerging space. I think they will continue to gain, these companies will continue to gain volume growth. They will continue to improve their margins also. They need to be more careful in terms of working on their cash burn. I think the cash burn has peaked already. They each one of them in the garb of getting more market share are opening more dark stores and looking forward for discounts, rolling out more and more discounts. Our take is that the competition will continue for some more time, but it's at the peak, and from here onwards, the prudence will prevail. And these are some of them are interesting bets for us to look forward to include them in their portfolios.
Okay, so right now is a good time, you're saying, to look at them.
No, one can start adding them. They have corrected from the peak valuations post listing. Like for the Swiggy, we've seen that there's a sudden demand and valuation were stretched, and it has been significantly corrected for the listed players. So my take is that one can start looking forward to accumulate them.
Sure, that's the call on quick commerce and the entire market as such. But with that, Dhiraj, would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure, and I look forward to interacting again sometime in the future.
Thank you. Happy Valentine's Day.
To you too. Thanks a lot. Well then, with that, of course, just taking a look at the markets, we have fizzled out. The Nifty, it's back below that 23,100 mark, and the mid cap index is already in the red, over 0.5% cut, and the breadth has turned negative. 709 advances to 1625 declines. 2:5, you could say. That's the NSE advance decline ratio. And what's not doing well is the Adani group of companies. Yesterday as well, they were the big laggards. Today as well, both Adani Enterprises and Adani Ports are the top laggards on the index. Some of the pharma names featured on the losers list: Dr. Reddy's Apollo Hospital, as well as Sun Pharma. But what's doing well, is HUL. That's the top Nifty gainer as of now. ITC as well, and some of the metal names are on the gainers list. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Let's hope that we end the day in the green today, although it is Valentine's Day. Here's wishing you and your loved ones a very, very happy Valentine's Day and a great weekend as well. But you guys stick to Money Control for all your latest news and updates.